Okay, traders, it's your boy the Friday King. As usual, we are always here to talk about what Forex trading. It has been a while. It has been a while without me being here, guys. So basically, like we said, we are going to look through the technical part and the fundamental part. However, every time we have traders come here on Thursday, they normally talk about the same one, the same issue. But personally, today I called it a Forex talk. I'm going to talk about Forex trading, how you can make money from Forex, how you can lose money from Forex. There are very many other ways of making money out of Forex. But before we go to that, you have to first know one thing. These are the charts that we have on our screen. You have to know that these charts, it is filled with data. And then what is the data that is filled in these candles? You must be well informed. You must be well informed. Okay. So if you remember when we are having the elections of America, we had some volatile, the market was so volatile. Then why was the market volatile? It was depending on the data that was being taken, that was taking place in what? In America. So today we saw this week, it was this week, we saw the week started with huge sales. If you remember, the previous week, the entire week, we are looking forward for the buys. If you go to the day time frame, you can be able to see that we're having more than 5 photos from here. This was 18th November 2024. That was Monday. That was last week. That's when we started buying on XAUSD. There are reasons why we are buying, because why we are buying, one of the reasons why we are buying, it's majorly because technically the market was supposed to be a bullish run. Together, technically the market was supposed to be a bullish run. But due to the fundamentals, the data, now here, this is what I want to get to. Recently, we had that one of our colleagues, that is China, they were able to find out, establish they had a lot of gold in their what? In their country. So meaning that gold has to lose value. That's why we started the entire week with multiple sales. I'm pretty sure that very many traders outside there, they are not sure why the sales were coming. However, those people who are good in technical analysis, we were already seeing that any time from now, sales will be coming. I'm gonna do for you some analysis here, and I'll get to show you why this sale was there technically. First told you the fundamental way. Now this is the technical part. So if my analysis was like this, last week I had to make the analysis. I had to look for the previous high, which was there. This was my high that I had. So when I'm doing analysis, I want to make things very clear for my followers that are watching there. You know, I don't like to use a lot of terms that are the inducements, the adjacent, the whatever. I don't want to complicate things. So I'm going to use the word high and low. So this is the highest that we had on the time frame. And remember, we don't have the lowest is a bit very far. The demand area is a bit very far. So we had this current move whereby we had sales. You remember where the sales were coming from. Here, this was it. So we started the week in this area. Now these are 2 weeks that we are playing with, because today is Thursday. From Monday to here, we are having these 1, 2, 3, 4 candles. So we are waiting for Friday to receive another candle here. I don't know whether you guys are good in following. So I had this. Let's assume this area was not there. This area was not there. So the technical part I had to mark the highest and the nearest what? The nearest low. Okay, that was it. That was my nearest high. I would put it there. Then apparently I had to look for the nearest what? For the nearest low. But remember, we have said that these areas are not here. So I had to consider price action. That is a price action. It had to show me that now this is supposed to be the low risk area on a daytime frame. Why? So I had to consider this area here. This was the order block of the previous charts, previous data. You get? So from there, I had to proceed. You know, I normally compile my notes. I normally proceed to lower time frames to get some daily bread. So from there, I had to proceed to 4-hour time frame. like the procedures, when you go to the another time frame, you have to make sure that you have to first refresh the screen. But before even going somewhere very far, due to the archness of the setup, you see even this week where it is playing from, it is exactly playing in our areas. They respected the low risk area and they respected another risk area. You get it? But remember, we have the expected sell and the expected buy. I don't know whether I'm making myself clear. But remember, I've said we are doing all of this. I don't know whether they allow me to do some replays. So these guys didn't subscribe. So however, so remember all this here, this area, it hasn't yet come in the market. We are still having only this. We are now analyzing backwards for 2 weeks to where we are. You will see that the market is playing in the what? In the areas. So we lost a lot of money the previous week. We are buying. So according to a loss of momentum in the market, we started identifying some signals that the market is trying to give us some trades. So we have to look forward to this area. We have to target this area here. I don't know whether I make myself clear. We have to target it. After targeting the area, so we expected that the market will have to come and enter. From very many traders, we have swept out from this area here. Why? Now that takes us to what we call the liquidity grab, and that's one of the things that I want to talk about today. You can call it a stop hunt. Those people who trade HMC, I think you know the meaning of a stop hunt. A stop hunt, we can call it, we can say that a stop hunt is, in briefly, you can say that a stop hunt is the false breakout in the market. Meaning by the false breakout, this is why we're going to see that the market is trying to give us a breakout of an area, and at the end of the day, they're going to come back to the particular area where we expect it to be the retest. Then the market will have to push upwards. Before I continue here, let me first put that here so that you can see whether we have the same one, the same pace. So this is our area that we have. You see, that is the resistance and the support. So I'm trying to show you what we call stop hunt. So the market will have to come. This is the market moving charts trying to create liquidity somewhere. So after there, the market will have to give us a breakout, meaning that those people who trade the breakouts, the rule says that you have to wait for the market to come back to your areas. After then coming back to your area, you wait for the retest. This is how we trade it. You have to come, wait for the retest, then we continue. Isn't it? That's the concept, which is very right. But unfortunately, in this matter, the market will just have to come from here, entering back to this area. They might first play from here, then they violate it. Now, this area here above, this one here, where I put the circle, that is what we mean by the mean. That's what we call the stop hunt. You can call it the liquidity grab. You can call it the liquidity sweep. You can call it anything you want. Now, this is what we call this. Is it called the buy stops liquidity or the sell stops liquidity? All those are types of liquidity. Meaning that at this area, the market is going to come to sweep all the stop losses that we have above here. Remember, all the traders, according to institutions of traders where they teach traders from, they normally tell them put your stop losses above the zones. So those people who try to trade with the institutions, they will normally have to come and execute their trades where you have put your stop losses. Now you have to know this. You have to know this as a trader. Just know that liquidity, this is where the market makers are going to put their positions. For the liquidity to form in the market, I want you guys to got me well. For the liquidity to form in the market, you have to, for the liquidity to be formed in the market, they'll always have to look for the stop loss. Another brief name you can use to identify liquidity or to explain what is liquidity, then you'll have to talk about stop losses. I don't know whether we are together. Okay? So, as we continue, we have to continue. Moment. So, from there, meaning that if the banks want to sell a certain pair, they'll have to look for the other people outside there buying the same what? Same pair or the same instrument. So during that period of doing that transaction, then liquidity is formed in the market. And that's why most of the time we are seeing the market giving us buys and sells at the same time. That's even sometimes leading to the market giving us consolidations in particular time frames. I don't know if I'm making myself clear. So that brings you back to what we call stop hunt. This is where they stopped hunting for the stop losses. They were hunting for the stop losses. Then they gave us back to the what? To another entry. That's why most of the time you will find some traders, where you're putting your buy, the guy is putting there what? A sell. Okay, or a buyer is putting there what? A sell. So that brings us back to our setup here. I was explaining that basically to give you the reason as to why the market violated this area, and they had to give us a move upwards. Then after that given up period of time, then they have to come back downwards to the given one, to the given area. However, now for this entire week we have been playing from here. The market is trying to push upwards and what? And downwards. Okay. So you see now this was a candle for Monday. They started the week selling. Now from Monday up to date, the market is giving us this only these small candles you see on 4 time frame. So you will not be able to understand all that if you don't have some knowledge on trading. Okay. So those are some of the ways you can do technical analysis. This is the same procedure. It's the same procedure you can use while going to it's the same procedure you can use while analyzing on the lower time frame. So after seeing that our work is accurate, now we shall have to minimize. Remember, you have to know one of the things, you have to make sure that your work is neat. Now, another rule here, don't say that because the market respected here, now this area was wrong. No, this area was right. They had to come and sweep. You know, we have this concept. We have this kind of concept here. Let me first remove this. We have a concept where the market has to, you know, these are structures. By the way, as you analyze the market, you have to know about what we call market structure, because market structure is a great key and you have to use it. If you don't know market structure, my dear, you are playing with your what? With yourself. So we have such concepts in the market, whereby the market will have to come, respect some areas. They come and respect now here, pushing backwards to this area here, you see. Then they'll have to come back and give you such movements. Such movements in the market, and they are always there. The problem is that we, the traders or the retail traders, we are not having that patience that we can be able to sit down and wait for the market to react. We always want quick money, so you always find yourself having a good setup, and at the end of the day, you find yourself violating the setup. Okay? Why? You say, I now have this setup was very good and clear, but I was not able to make money from it. Just basically that happens because you don't know how to do what? How to trust your strategy. You don't trust your setups. You don't know what you are doing. Okay? So you have to be very careful. Now you have to know we have two types of participants in the Forex market. We have the retail traders, the retail participants, that's we, me and you, who open the day trades, the swing trades, you know. Then we have what we call the institutional participants. Under the institutional participants, most of the time we shall find there the banks. Those are the money makers. We will find there the trading firms. Okay, those are large sums organizations and companies that are making trades, and for them even are trading like the way you are trading, they're using bonds and so on ranges. Okay, so you must be very technical when you're doing the analysis. You have to be very technical. Now, if you look at the setup that I'm having on gold, it is a very good indication that they are still having a bullish run market. So there are chances of the market giving us this structure, according to what I'm seeing here. The chances of the market giving us that to this area. And now here we mostly find a problem this area. This area has to be respected 3 times. So find I've respected it 2 times. Okay, so it might either break out or proceeding back downwards from there. So you have to be very careful trading XAU. That's where I come to recommend you all traders Now you have to remember that this is the festival season. I remember when your mentor was teaching you, he talked about what we call the festival season. And under the festival season, we have from November, basically September to January. You have to be very careful. Those last 4 to 3 months of the year, those are festival season. The money is saturation, okay? People are overspending the money. We expect a lot of things to happen in the forex chart. That's why if you have been observing nowadays, the market is no longer moving in London session, it's no longer moving in New York session. But you find yourself in the time the market is moving at night. You ask yourself now, how could I get this? Okay. So all those things you must be, all what I'm trying to put in order today, you must be informed taking trades. Let me hope that is very clear. So you'll find that now this is 4 hour time frame. If I'm to continue now, I've got what I wanted from here. Now I have to minimize. Now I'm going to mark. Now this is the nearest high I have, and the nearest low is there. So when you proceed to 1 hour time frame, you're going to find out the risk areas turning out to be the what? The good areas to expect in your trades. Meaning that for you, me and you are looking for days bread. You are not supposed to trade on higher time frames. Why? Because you won't be able to make some money. You won't be able to make some money for that particular day. You'll end up losing. But for the swing traders, I recommend you to use higher time frames for trading, because there you can trade a pair one instrument and you hold it as a cryptocurrency. Now, like me, I've been trading. I entered the BTC USD. It was still 6K. That was 60K. Okay. Then from 60K, that is 60,000. Now, as we speak, the Bitcoin has already reached 99. Okay. So meaning, if you are a swing trader, you have to make your analysis from weekly, daily, 4 hour time frame, then execute your trade in 1 hour time frame. So just because of time, I might not be able to take you through how to get the sniper entries, but at least I can barely talk about them little. So now, as we continue with our technical analysis, now these are the lines we have, meaning now they're not dotted. Okay? We can say this is my expected sell area. Like normally you see my setups, you know how we normally go about it. This is the expected sell area. Okay, this is my expected sell area. Then this is the expected buy area. However, I don't expect the market to come back right today or tomorrow, but it will have to come back sometime. Okay, so after giving us these 2 lines, it's not a must. It's not a must that you're supposed to add in the low risk area. One of the reasons why we add in the low risk area is basically to take us through the lower time frames. Okay, so whenever you add in the low risk area, when you go the lower time frames, you'll find your work need. You have where to trade from. You have where, even if you're a scalper, at least you have a playing area. I don't know whether I'm making myself clear. So now let's assume this is my 1 hour time frame. Now I want to trade on 15. I'll have, of course, to look for low risk areas. Why am I putting it here? Price action. Okay, I answered this summit. I will tell you to put here below the gap, but I'm not there. This is me. I'll put here my area looking forward for the price action. Then the same thing happens here. If you have been observing, the market was coming very many times. So I have to look for another area of liquidity. Then that's where I'll have to put my low risk area. So if you proceed to the lower time frame, you'll find that the dotted lines that we have just added, let me make them thick. You'll find that now these lines are turning out to be the expected seller. Whenever you proceed, now minimum like 15 to 5, you'll find out the dotted lines turning out to be the strong areas. And that's how even we get entries. It is the same concept that we use. Let me have a brief about it. I'll show you what I'm talking about. So if I was to take trades here, let's assume I'm to take trades from here. Basically I would say this is a good area for an entry. Okay, this was a good area for an entry. Remember, we have a rule that guides us. Always after consolidation, expect an impact, isn't it? So you'll find someone entering from this area, putting your stop loss below the marked area, your target, your take profit above. Stop loss has to be where? Has to be there. So there are other ways of minimizing this. You just have to proceed to the lower time frame you'll find yourself getting some good what? Some good positions there. You might teach those things there. If you go to the Telegram channels, YouTube channels, they'll show you more about it. Okay. So before you continue, allow me to take this clear. We are here basically. We are with Tamam Market Services as the broker that we have in Uganda. This is the only broker you know that if you have problems, you can go and reach out to them. If you don't know how to trade, you can go and attend their lessons. They always have free lessons. They are teaching out people how to what? Trade and make money. Okay. They are even having bonuses. You give you always some free bonuses, sometimes 100%, 20%, any kind of bonus are always what? Are always there. So it's you to wait and claim for. Then lastly, it is good. It's a good brokerage. Right now, it's one of the brokerages that I know that is having good spreads with the zero what with commission, unless otherwise, unless you go to go in for the swap fees. But for the terms of spreads, I'm very sure those that have been trading with it for some time, they have witnessed it. Like any other broker, there are some issues, but at least it has been favorable for some good time. Now I think this is the fourth year in Uganda. Okay, so always these sessions are always there on Thursday the same time. Always keep time. If you want to add something on yourself, do it. Now, after doing the analysis part, those that have understood, let us proceed to something else. So guys, let us talk about how to make money trading. How can you look for, the biggest problem we face as with the traders, especially in my country, that is Uganda, it is capital. And that capital is always looking for trading capital. But one of the ways to make or to get capital is number one, how to get capital. First learn how to get capital. Number one. Let me first talk about this. These are the steps you have to look through as a trader. How to make money from what? From trading, yeah? How to make from Forex. So that we have said step number one, learn. Step number one, learn. That's number one. Learn how to trade. If you don't know how to trade, you won't be able to make money. You won't be able to collect some capital for trading. I know one of the biggest scenario that the blunder we face in Uganda is that we lack capital, trading capital. However, did you know that even you can trade with 50K, that is $15. To some people it is pocket change, but you can trade with $15 and make it to 3K. It is very possible, and you have not flipped the account. Also, or scalp or anything. You can enter a swing trade with your small money, hold the trade, target around 100 to 500 pips. You'll make money from that. You can collect some good capital, but all that requires you to have this. You have to wait. Always, you have to do what? To wait. You can say you must be patient with yourself. Patience will always lead you to collect some money. Learn. Step number two, you have to give in time. Wait. When I make analysis like now that setup I've made there, you have to wait for it to be respected. It will take days, it will take years, it will take time. That's why it will call you up to for the long-term traders. That is the swing what? Trade. Then number two, how to make money from Forex. This is number three, trade. You have to trade. But you see these things are going in order. Number one, we have said learn. First, learn how to trade, learn the concept, learn when to buy or sell in the market. Then from there, you have to learn how to wait. Always you have to wait with the setups you have what you are making. If you are not good at waiting, you will find yourself not making any single point in the Forex market. And number three, I've said you can make money from Forex by trading. Okay. Now this one is a bit wide. How do you trade? Now that's something very wide. That's what we all do. That's what mentors preach out. And now every mentor outside there, him or her, they have their what? Their ways of trading. You'll find them, depending on his analysis or her analysis, she will say, or he will say that now me I'm buying, and he also say that I'm buying. We have used different approaches. So market approach also matters. All those lead you to what? To learn. Then another thing, if I'm to trade, what am I supposed to trade? Now also that thing is mine. What am I supposed to trade to make money? We have types. We have a demo account and a real account. You can trade a demo account, they are not making money, but you are learning. Okay. By the way, here in Uganda we spoiled the use of a demo account. And by the way, if I'm to recommend you outside there, you feel like you want to learn something in trading, step number one, you must have a demo account. That's number one, regardless of the size you have. Always as a forex trader, you must be able to trade or to back test what you. If you are targeting to trade capital over 2 million, go on any broker, go to TBS, invest for a demo account of 2 million. UGX, deposit it is a demo account. Then give in yourself 2 weeks. See how you can grow your account. How can you be consistent with your what? With your account. So, but here in Uganda, people are using demo accounts to grab people's money, which is very bad. So, by the way, to make it very good, clear, some brokers outside there brought it and made it easy for us to identify a demo account and what? Which is not a demo. But another thing is, it's not bad to trade a demo. If someone is doing something with demo account, that is a very good assurance that he or him can be able to do the same thing with a what? With a real account. Okay? Now, to that, as I talk about demo accounts, it brings me to another way, which is point number 4. You have to trade prop firms. Prop firms. Prop firms is another way of making money. Is another way of collecting forex what? Forex money. And by the prop firms are a bit wide. And I think as I conclude this lesson, I will talk about the prop firms, how they work. Okay. Then another way, they are trading robots. Let us talk about it. It's a strategy. Yeah? Hey, people can use trading robots. I'm going to show you how. I have the trading robots. I don't recommend them. Quote me well. I don't recommend them. Trading bots, unless you are using the ones for or the bracket, the EAs, expert advisor, EAs. Unless you are using the ones for what? For risk management. For those ones, it's fine. But personally, I don't recommend them. Don't recommend it. Okay. Now, for this one, how does the trading bots work? There are those that we call the higher frequency trading bots. Those ones, even prop firms, they don't allow them. To an extent, even some brokers don't allow you to make money using those bots. This is where you're gonna get a software, you install it in your phone or your laptop, and this software, you're gonna give it instructions. You can say whenever you see a good trade, you can open 1,000 trades. Whenever you see blue, you can close. Let us assume it has opened 1,000 cells. Let's assume on XAU. In less than seconds, it has closed the profits. Meaning, by the time it closes, if everyone it is in $1, it's $1. By the time they close all the positions, you have already made 1K in less than 1 minute. That's how trading bots work. However, that's a way. And another thing is that you can sell them. There are people there that are good in ICT. They go on and they manufacture their trading bots. They sell them out. Even that's another way of making what? Of making money. Trading bots. However, personally, I don't recommend trading bots. Why? Why don't I recommend them? Number one, trading bots, it is someone who started. That's number one. Number two, it is a software that can easily crash, meaning that you might be aiming for buys and it opens sales. It can make you profit, then it closes losses. Everything is very possible. Get it? That's a way of making money. However, I don't recommend them. Even some pro firms, I don't, because you can easily win them or you can easily challenge them. You can make a week without making any losses. Another reason why I don't recommend the trading bot is that you won't be able to learn. You won't be able to learn. Yet you have said step number one has to be learn how to trade. Gain some information about the forex market. Okay, so you want to be able to do that. Now, most of the people who use it, who use the trading bots, they normally don't have the what? The step number 2, they lack step number 2, they always don't wait for their setups. He or she might be able to know that now the market is going to buy. He updates the robot, then from there it starts off using scalping the what? The setup. And by the way, I have my colleagues there, they sell them out, but I don't recommend the trading. I don't recommend them. So there are other steps there that you can make money. Leave alone these things of mentorship because you want to mentor someone, but you also need to be mentored. That is not about making money now. That's being a scam. Yeah, by the way, scamming is another step. So apart from that, then these people are selling signals. Also, that is there, but I don't recommend also that because you might give out wrong signals. You lack some information also personally. But let us talk about the prop firms. So, how do prop firms work? How do prop firms work? Prop firms, these are the group of people. Let me put them here. Prop firms. Prop firms, how they work, How they work. How do prop firms work? Number one, you have to know that this is a group of people who come up with an idea and they give some value to the demo account. Let me use that definition. It is very easy to understand. This is a group of company or people who sit down and they give some values to a demo account. I can be a family king. I have my money. I go to XNS. I tell them to create me 1,000 demo accounts. Then I'm going to sell each demo account. I'm going to buy it $200. And if I put in some rules to guide you. If you breach one of the rules, it means that I've taken the $200. You get it? So that's the brief way of prop firms, how they work. Number one, these prop firms, they have drawdowns. That's now these are the things that can limit you to make money from what? Prop firms. They can limit you from making money from what? From prop firms. Okay? A moment. You can be limited from making money from prop firms. Basically, if you misfire with the drawdowns, you must be very careful trading the drawdowns. Here we have what we call drawdowns, meaning that if you don't know how to trade, I'm going to give you an account. I tell you, you're not supposed to lose negative of, let's assume 5% every day. Okay? If you lose it, you have breached the account. Okay? Then number two, I can say you're not supposed to lose 8. Normally they give 8. Then if not 8, they can give you 10. They can give you 8 to 10%. Mostly 10. So if you breach one of the two, you will find yourself losing money. You have lost all the money you invested in when you are buying a given account. And 4% here. Meaning if the account is for $500 here, let's assume they have given you an account. They have given an account of 1K, or let's assume 100K. If the account is for 100K, like this, you're not supposed to lose 5% of 100K account. This is the account you have. You're not supposed to lose negative 5%. 5% stroke 4%. Some prop firms, there are firms that I know that they give out the concept of you're not supposed to lose 4%, meaning you're not supposed to lose, at least you're not supposed to lose, let's assume 5,000 stroke 4,000. But remember, you bought this account. At least you bought the account, they took $500 from you. Purchased at $500, isn't it? $500. So meaning now all by respecting these rules they are giving you, you are protecting your Your $500. Now these are the rules. You're not supposed to lose daily. This is the daily loss. Normally that is the daily Daily loss. You are not supposed to lose it. It is the daily Daily loss. Then number 2, they will say you're not supposed to lose 8%. 8% stroke 10%, isn't it? Some programs they give us 10%, and those are the recommended programs that you can consider when purchasing an account. Meaning you're not supposed to lose, at least you're not supposed to lose 800 or 10k on a 100k account. You're supposed to lose $8,000 stroke 10k. Now remember, now you are not supposed to forget this. You are trading a demo account. They have sold you to a demo account. The demo account, you have bought it at $500 because you are looking forward to get some huge funds. Then they will have to put in some rules to consider for you to be able to be funded. Okay, they're going to say you are not supposed to lose 5% every day. If you make a loss of 5%, you have lost the $500. You have to go and look for the $500. You buy the same account, you start the process again. Okay, I'm trying to show you how process. Okay, so from there they will say some other firms like Faraday Next, when you're trading the Stellar Light, it's called the Stellar Light, they'll give you 4%. Even FXify will give you 4% drawdowns. They'll say you are not supposed to lose 4% every day. Meaning, if you make a loss of 4,000 on a 100k account, that's a demo account, by the way, you have lost the $500 that you used to do to purchase the account. Meaning, you're supposed to go back and do the same thing. Now, they put the overall loss. This is the overall loss. Here down below, it is the overall loss. The other one up is the daily loss, and then this is the overall. Overall loss. Overall loss. For the overall loss, you're not supposed to lose 8% and 10%. Meaning, if you come on Monday and make a loss of 1k, then you lose 3k on Tuesday. That is almost a full. Then you lose 2k on Wednesday. Meaning, you're trying to see, are you a good trader? Are you really consistent in what you're doing? Do you really know how to trade? Can you really manage 100k? If I'm investing in my 100, that is 10k, that's 100k US dollars. Can you really manage my money if I'm an investor? Then they have to say you're not supposed to be making losses. Okay, so remember they have given here daily loss, meaning every day you're not supposed to risk more than 4% or 5%. Once you breach that, then the account is gone. The same thing applies to the overall loss. It is the same concept. And remember, this is the vice versa. The vice versa, now these are the same thing as the targets. Remember, and this is the what? The target again. They always put in the target, saying that if you make 10%, or you make 8% for some firms, then there you can be forwarded to another step. There are firms that are giving you step 1, step 2, and step 3. So when you talk about the steps, these are the evaluations, the phases you go through. Let me give an example about this kind. You are someone there, you have your degree. Now let's assume the degree is the knowledge you have for Forex trading. So you are looking for a job. Now let's assume the steps that you are taking to look for the given job, it is the $500 you are going to use to purchase an account. Are we together? Let us consider that is the transport, the fees requested for the forms, as you know about the country. So after them going for an interview, they have to give you an interview. If you are to request for a job in a school, they have to give you a test to see, are you really a good teacher? Do you have some real knowledge? Did you go to school? Okay. They will not only look at the papers. Now, like us here, we have been able to trade some prop firms. We have a lot of certificates outside there. Meaning, if I'm to go to another prop firm, I'm not supposed to take in my certificates to request for a funded account. No, you'll have to test me. Am I really a good trader? Did I really get the certificate? Now, this is the process they will take you through. They'll have to give you challenges. They see, can you maintain the money? Now, this is it. Here, they'll give you 2 challenges. Then some of them, they give you 1 and they put fair target. If you hit the target in 1 step, then you get funded. They give you that 100K account when it is a real what? A real account. Are we together? Then, if you fail to hit the target and you have breached all these things that are put here, meaning it is the same thing that you're going to face. You're going to lose this $500, look for another money to do the same thing. However, this is now the sweetness of Pro-Farms. The sweetness of Pro-Farms. Once you get the 100K, once you get the 100K in the hole, let's assume funded with 100K. So if you are funded with 100K, any kind of profits you make, funded with 100K, funded with 100K account, any kind of profits you make, they are yours. Some other Pro-Farms will put for you how you can get your share. But what I know, the least Pro-Farm that gives out less amount, it is, I think it is called 5%. Can give you 65. At other brokers, they normally give us 75% of all profits made. Even if you make 50K as your profit, even if you make 3K as your profit, and if you make 10K, they'll give you money as a whole. Most of other Pro-Farms, they have a payout period. And the period is like this: number 1, month. That is the Pro-Farm that delays to pay. Like FTMO, you'll have to wait for a full month, even further the next. Okay. Then other normal Pro-Farms will give you bi-weekly. Those are after 2 weeks. Request your payout and you receive it less than 72 hours or 48 hours. Okay. Then lastly, it is called payout on demand. By then, now, like funding people, they can give you every after 1 week. You can request your payout. Then FXFi, they give you payout on demand. That's funded. It is got funded traders. The same thing applies there. All those are some of Pro-Farms that are helping traders to make some money. But remember now, this is the hardest part. If you don't know how to trade, don't go in for Pro-Farms. I'm seeing outside mentors, they are teaching people. You know your friend is a newbie and you are giving him to trade a Pro-Farm, meaning you're making him lose his what? Money. So what you're supposed to do, first learn how to trade, then you can be able to pass for this. Because if you look at the 10%, 4% rules, those are at least those are trying to give you one risk management. Even you have what we call the consistency rule. You must be consistent. You have what we call trailing stop losses. All those are deep rules inside there. Okay? Even they have the 3% rule in some firms. All those are rules. They are making it very hard for you. But I promise you, as a Forex trader, if you know how to trade and you pass all those rules that they are put in order for you, you'll be able to receive your payout. Okay? Now, someone can ask me, I know these are some of the questions I normally receive. That how long do these people pay? Do they really pay? Such questions, they really pay? They do pay, but you have to be considering and avoid buying accounts. Avoid to buy accounts without consulting from people because there are very many Pro-Farms outside there. There are very many Pro-Farms outside there that are aiming at scamming people's money. Okay? Scamming people's money. Be very careful. That's why that's a way of making money from trading, guys. And this is the fact I can recommend. So meaning you can either deposit the $500. Let us assume I've deposited the $500. That is to end. And at the end of the day, I make a loss on I lose 1% of $500. You'll find that I'll be losing almost $10 every day. Or every trade I take. I'm having less money to take in my positions. But here the Pro-Farms are giving you some good opportunity to take in the trades. Okay? So you have to just consider how you're supposed to balance your trade. How you are supposed to balance. As I'm concluding my lectures, guys, allow me tell you this. When are you supposed to trade and when are you not supposed to trade? First of all, you must be very sure of what we call trading session. Have what we call trading session. There are very many trading sessions. When to trade, when trade and not to trade, not trade. This is the major one. Sessions. Under the sessions, we have Asian session, we have the London session, and we have New York session. See what is it? So this is New York session. Then we have others down there. We have others down there like the Tokyo, the Sydney, the DC, all those are there. But these are the major three ones that we have. You must be able to know which pair that moves in which time. Let us assume the Asian session. If I were you trading, I would always trade Bitcoin in Asian session. Make some good money. Another device. Take your trades, Asian session. Okay? Then number two, you have to know what pairs that can be traded in London session. Whenever I talk about the sessions, first of all, you have to know what are the sessions. This is the period when particular banks of a given area always open. So we expect all banks in London to open by the given period of time. Okay? So meaning you're supposed to look at pairs for London, such as the euros, pounds. Okay? Then we have what we call New York session. New York session, now those people like trading gold. Avoid taking trades in London session. Avoid taking trades in Asian session. Always look for taking trades from the New York session. Those people that are taking, for those people that are taking trades on what? On gold. Okay? Always gold is good in moving during the period of New York session. There are very many other pairs. I know your mentors are trying to do what? Always try out to preach them to you outside there. So that is when you're supposed to trade. Meaning you're supposed to know that this pair, I want it, but I'm supposed to trade it in this period of time. Meaning you're not supposed to look for entries. But if you're saying a trader, you're swinging, for it's okay. Scalpers, this goes to you also. Look for the particular time taking your trade. You can make money. Now, for people that are scalpers, always trade New York session. Why? New York session is always volatile. But the problem here is, can you wait for the market and you start entering your trades in New York session? Now, what is the period of what each time here has its own time? New York session always starts from 3 p.m. To at least maximum of 12 a.m. And around there, we have other sessions that I don't like to talk about, the minor. Then the London session always starts from 9 a.m. and it's more effective from 10 to 12. Okay? Then Asian session from 1 p.m. at night, 1 a.m. at night to the London session. Okay? That is Asian session. And the Asian session is full of consolidation, candles with less momentum most of the time. Then we always look at a lot of manipulations in London session. The New York session is where we have to wait for liquidity grabs, for the liquidity sweeps, and get the direction of the market. I don't know whether we are together. So that is when a Forex trader is supposed to take your trades. I've told you, people that are trading Bitcoin, I recommend you to take your trades in New York session. Avoid the trading in London session. For those people who are trading gold, also do the same. Take your trades in New York session. Avoid trading London session for gold, unless otherwise. Okay. The London session, trade these other pairs. Those funny pairs, very weak. The bottle pairs. I call them bottles. So today I've been able to take you through the technical analysis, how we can do some analysis technically. Then from there, I was able to give you some information as to why we are seeing gold selling. Then from there, I talked about how you can make money from Forex. And I've told you, number one, you're supposed to learn how to trade. Number two, you have to wait. You have to be with that patience. You have to take trades and you always wait for them to happen, the setups to happen. Number 3 on how to make money from trading, from Forex, you have to trade. And other trading, we trade a lot of things. We trade brokers, you deposit on the broker, talked about it, end up losing money quickly. Then I've told you if you're looking for capital again, you have to trade pro farms. Before the pro farms, I talked about trading bots, and I've told you I don't recommend them, but I've been able to tell you how they work. You have them, you can, if you don't have time, there are people out there that are selling them and they have been able to make money using them. However, I don't recommend them. Then number 6 was, I told you, it is funny, but it is true. You can scam. Scamming is also another way of making money from trading. If you're a good scammer, hey, you can scam people, but I don't recommend that. There are better ways of scamming. And lastly, I told you, use the demo accounts, because this regime of ours, demo accounts having value. If you can go look at the prop firms, how prop firms work, trading demo accounts, meaning even me can come out and I say, I have a 100K account, Ugandan shilling, but these are the rules. If you pass the rules, you take, I fund with my money. If you don't, then that's the same concept. Even some people who do account management, they go through that. They give you a demo account over the same amount they expect you to trade. If you fail to manage the money, you'll end up losing. So those are the 6 ways I've talked about. However, the 6th one I've not written it down. That is the scam thing. You can scam people if you want to make money. However, I don't recommend that. You end up in jail. Then we emphasized on how prop firms work. I said when you are looking at the prop firms, you are fighting to save your $500. If you buy the 100K account, they'll always give you rules. We have the drawdowns, that's rule number 1. Then number 2, we have the consistency rule. Okay, I've explained this. The consistency rule, you're not supposed to be losing money. Consistent, like every Monday you lose, Tuesday you lose, Thursday you lose, you're not consistent. Then rule number 3, we have that thing of trailing stop losses. Very many traders out there, they don't know how trailing stop losses work. Okay. Then, lastly, I talked about the interview thing. Interviews, you'll never get any job anywhere without doing interviews. So it is the same concept you go through when you're taking your trades on prop firms. Okay. So briefly, those are some of the things we have talked about. And lastly, I talked about the sessions. Sessions, they answer that question: when are you supposed to trade, and when are you not supposed to do what? To trade. Learn, go back and sit down and learn which pairs are you supposed to trade in a particular time. For those people that are aiming to trade daily, the day traders, intraday, the swing traders, go back, especially the scalpers. Sit down. If you want to scalp in London session, look forward to scalp on the pairs of London session, such as Euro, USD, GBP, USD. Okay, all those pairs are for London session. The GBP, JPYs, USD JPY, Australian dollar JPY, Australian chip, all those pairs are for Asian session because they normally move in Asia. Then talked about London session, it has its pairs. Said if you want to make money, more money, trading Bitcoin, use Asian session. Then lastly, talked about the New York session. Talked about the New York session. New York session is basically recommended for people trading all USD pairs. That's number 1. And for those people trading the metals, XAUSD and XAU, that is XAD, USD, that is silver. Okay, take your positions in the New York session. I've not been so much in technical analysis, basically because every trader who comes here, they always take it through technical analysis. So I wanted to give you some information that normally some people think that they know, but they don't know. They don't know. Rules to consider when purchasing an account. Number 1, you have to consider the following before you go in for an account. If they post any certificate, consider the QR code. It must be there, especially on the famous prop firms such as Funded Next. I've been seeing very many traders outside there on TikTok. trying to preach out that they have received the payout from Vanity Next, but they don't have 2 coins. That is a scam. Now that's a wolf scamming. That's a wolf scamming. Go and print your certificate and you get. So guys, avoid that. Whenever someone shows you any certificate for a program, always you can verify it from the king. Then another thing to consider the period. How long has the program been there? Minimum, it has to be there for 3 years. 3 years and above. For example, look at Planning Pips. Planning Pips started 2022. 2022 started. Vanity FX started 2022, and all those are some of the best programs that we have right now. But still, I don't recommend them. Why? Because they don't have only 2 years. They can go. Okay. And look at programs like FTMO. It has been there for 15 years. Go and look for Audacity Capital. It has been there for almost 13 years. Go and look for Piper Centers. Those are the programs that have been there. They have been facilitating the traders and without any complaints. Okay, so those are 2 things. 2 code, consider it. Look at the period. Now, period, another thing, consider what period of time do they give out their payout. Is it a bi-weekly payout? Is it a monthly payout? Is it a weekly payout? Or is it on? Those are 4 things. And if I'm to recommend you outside there, looking for a platform to buy an account, for platforms like FTMO, it will give you a payout in 30 days. Look out for platforms like FX5. By the way, if you go to the leaderboard right now, it is among the best 10. Have FX5, or it gives you a fast payout on demand. As long as you pass the phases, then you make profits on your first profits on the live account, you can request for what? Okay. There are very many other things you can consider, but all in all, I'm giving out these things, you have to avoid scammers, because very many people outside there have their prop farms. Okay. Now we had a prop farm that was called Speedy Funded Trace, Speedy Funded something. It was there. It took very many people's money. Another thing, guys, I had forgot to talk about this. Avoid the cheap prop farms. That's the third way of seeing a scam. If the prop farm is very cheap, don't purchase an account from it. If the program is giving out continuous discounts, avoid it. Avoid it. Those crazy discounts giving out 50% and above. I found a program giving out 80% discount, and you also run with your money and buy an account. Guys, be wise. You have to be wise. You have to be wise. Avoid programs like Equity Edge. I don't recommend it. It's not a scam, but I don't recommend it. Why? Because of their prices. You cannot tell me that I'm buying a 100K account at $100. No, not. That's a scam. Okay. Avoid prop firms that are giving out a lot of discounts. Avoid cheap prop firms. If you don't have money for a prop firm, my dear friend, avoid buying. Then deposit and trade. Okay. Another thing. If you want to make money from trading prop firms, your starting account should be, at least for the learners, for the newbies, for the starters, let it be the 25K. Meaning 20K account, 10K, the other 15K, 6K, 5K, 2K, wasting time and wasting your money. If you don't have money, wait for discounts, or you can keep your money in the box slowly until you make money that can buy a 50K account. Those are recommendations. Today I came in basically I wanted to talk about funds. So without wasting time, guys, I would like to stop there for my information. You have to go and check us on the TBS accounts. Go and check for Tamam Brokerage Services. If you want to subscribe here, you can subscribe on our Telegram and our YouTube channel, because the lessons are always there. Okay. Then, if you want to know more about Forex prop firms, yeah, more is available. That's the Vanity King. The Vanity King you have in what? And yes. For inquiries, it's your boy that attending today's ones. Stay well, guys.